So today we're talking about a massive billion-dollar bet being made by one of the world's biggest food giants. It's a story all about a mega merger and a really bold plan to build a, get this, shock-proof supply chain in a world that feels more volatile every day. Let's jump right in.
Okay, so the whole story really boils down to two huge headline-grabbing numbers. These numbers tell you everything you need to know about a major shift happening at Bunge, which, as you know, is one of the biggest players in the agribusiness game.
First up is this number, 1.2 times billion dollars. That's how much new debt Bunge just raised. We're talking a massive injection of cash that they finalized on March 19th, 2026.
But wait, there's more. That wasn't their only big play. Right around the same time, Bunge made another huge announcement, and this one was aimed directly at its shareholders. It was a move that just screams confidence in their own financial future.
And here is that second jaw-dropping number, $3 billion. That is the size of the brand new stock buyback program that Bunge's board just gave the green light to. So you've got this huge debt raise on one hand, and a massive stock buyback on the other. Think of these as two really important, really powerful pieces of a much, much bigger puzzle.
And that brings us to the big question, right? Why is Bunge doing all of this now? What is this all telling us about their master plan for the future of our global food supply?
Okay, to really get why they're making these billion-dollar moves, we have to go back in time a little bit. We need to look at the one event that completely changed the game for them last year, and that was the Viterra mega merger.
All right, so this timeline really lays it all out for us. It kicks off with that huge $8.2 billion merger with Viterra back in July of 2025. Fast forward to March 2026, and Bunge's at their investor day, basically telling everyone the integration is a runaway success. And then, just a few days later, boom, they lock in that $1.2 billion in new debt. Trust me, the timing here is no accident. These events are all connected.
And this merger, wow, it was an absolute game changer. Viterra brought this colossal network to the table. We're talking over 30 processing and refining facilities spread out across 11 different countries. You know, things like oil crush plants, sugarcane mills, even biodiesel refineries. This single move just massively blew up Bunge's global footprint and what they were capable of doing.
Okay, so let's dig into how this is all paying off. Because the merger wasn't just about getting bigger. The real story here is that it's proving to be incredibly successful and way faster than pretty much anyone expected.
And you can see the proof right here in the numbers. Bunge's original forecast for cost savings, the synergies you get from combining two big operations, was $175 million. But their new forecast, it's jumped to $190 million. So they aren't just hitting their targets, they are absolutely shattering them.
And look, this isn't just about spreadsheets and numbers. The CEO of Bunge, Greg Heckman, came out and said it himself. He said they're already seeing, and I quote, increased connectivity and flow of information across the entire combined company. That is a massive signal that this whole integration thing is working, like on a deep, fundamental level.
So here's the key takeaway. This super successful merger, it's not the finish line, not even close. It's actually the fuel for a much, much bigger and more ambitious plan they have for the future.
And at the very heart of that strategy is their answer to this big idea: geopolitical volatility. I mean, we're talking about anything and everything that can mess with the global flow of food. Conflicts that stop grain shipments, crazy weather events and droughts hitting harvests, or even global pandemics that snarl up ports for months. This is the exact problem Bunge is building itself to survive.
And this right here, this is their solution in a nutshell. By joining forces with Viterra, they've created this incredibly vast and diversified network that is literally designed for disruption. They have assets in every single major agricultural region you can think of, from sourcing crops in the Americas and Australia to processing them in Asia. What this gives them is this almost unmatched ability to just reroute food around the globe, absorbing the kinds of shocks that would absolutely cripple a smaller company.
Okay, so let's put it all together. The merger, the new debt, the stock buyback. What does it all mean? What's the message they're sending out to investors, to their customers, and yeah, to the entire agribusiness world?
Yeah, let's be really clear about this. Raising $1.2 billion isn't just some boring accounting move to balance the books. No way. It is a loud and clear statement about Bunge's strength and its vision for where it's headed.
So what are the big signals we should be picking up on? Well, first, that the Viterra integration isn't just working, it's a massive success and it's happening ahead of schedule. Second, it shows that Bunge's leadership is incredibly confident. Third, the fact that they could raise this much money and get good terms for it proves that Wall Street is confident in them too. And finally, and this is maybe the biggest point of all, Bunge is making a very clear, very deliberate play to dominate the entire global agribusiness sector.
Which really leaves us with one last and pretty fascinating question to think about. By building a company this huge, this flexible, a company that's actually designed to thrive when things get chaotic, are we looking at the new blueprint for what it takes to be a global food superpower in this increasingly crazy world?